Ben, welcome back to Face, my trading warrior brother.
Hey Dale, how are you? It's great to hear you and Blake and all the guys. What an exciting time to be alive. I mean, it's unbelievable the changes and the opportunities and the puzzles that the
Yeah,
markets are giving us to solve. It's just I'm so excited. I really
y-
really am.
yeah, it's all excited going into the apocalypse. And I really have to acknowledge, you've been bullish to gold for a long time. You
Hmm.
got on, as you say, the silver bullet train. You called for a sharp sell-off in April in the market, which we got, and then a new high in May, which is also manifested.
Yeah.
You've been long Bitcoin for a while,
Yep.
and I'm wondering, have you changed your view at all in the dollar, or still bullish the dollar?
Still bullish the dollar.
Okay,
And
you
it's
don't flip
and
much.
and remember, it's what I really try to do is I try to get the big trends right,
Yeah,
and because I've found when I focus on the wiggles and get down to it, I don't have much of an edge there. So I don't
yeah,
try to play in that sandbox. I try and for the bigger trends. But I think a lot of the things that you and Blake and K-Man went over this morning are the puzzles and the cross currents that we're seeing right now, which is short term, things like gold and silver and Bitcoin are probably going to correct. But does that mean I want to short them or give up my long-term positions? No, because the
okay,
big wave is still behind those things. And we'll
okay,
talk about that in other things because I think the best way to describe it, I was talking with a buddy of mine and I said, it's kind of like when you're at the beach and you're in between high tide and low tide, and you get that slack tide where you're right
yeah,
at that shift. I think we're right there in all of these markets where it's almost like we're still. The tide's not moving out and it's not moving in yet, but we're
the
we're
eye of
in.
the hurricane.
I think that's right. I think that's where we are. And
Okay,
it's confusing a lot of people, and quite frankly, listening to your guys' description of the S&P is exactly where I am. The time is up. The cycle came, right? We had the high. It should have come in and we should have started selling off, but we haven't yet, right? Price is not confirming that cycle. So you have to be realistic and practical about it and say, okay, now I got to assign probabilities. What's the likelihood that we go up from here? What's the likelihood that we go down from here? And I'm really at a coin flip right now because I don't have the technical evidence to support the timing yet. And that's
what
that's the
would
that's
what would be the technical evidence that would confirm a top for you? Is it trading beneath a certain price level? And you can share your screen if you wanted
yeah,
to,
let
Ben.
me share and then we'll get into the presentation. How you been, Dale? All
Okay,
good with
buddy.
you?
Yeah, things are fine.
That's good.
Grateful.
So, and we'll get into it within the S&P, but yeah, I want to start seeing, lower highs and lower lows, in at
Yeah,
least like a 4 hour time frame.
got it.
And then have it, translate into the daily because as you know, that it's like a wave, right? It starts in the shorter time frames and then it starts picking up, and that's when the momentum kicks in when the higher time frames start jumping on board. But we'll talk about it and we'll see the levels and sort of the areas where we got to look to have more confidence that we've gotten the turn. Um, this presentation that I'm going to talk about is we're in the next phase, right? We are approaching the end of the first half here in 2024, moving into the second half of the year when this big shift is happening. The things that we're seeing start to show up. There is a major battle going on, which is fairly predictable because you're at the end of a cycle where things have been centralized and you're moving to one where they're going to be dispersed and they're going to be more localized and smaller. And so
Okay.
whoever's in charge and in power at the end of a regime or the end of a cycle or the end of an empire, they hold on for dear life and they try to double down. And I think we've seen that for the last 3 or 4 years, and it's really coming to a head right now where the trends of the epoch cycle and the end of one epoch and the beginning of the next are banging up against the people in power and the elites that want to hold on to it, which is why we're seeing speech, sort of come under fire, free speech come under fire and restricted. We're seeing rules to restrict online activity or dissenting voices or dissenting opinions. All that is kind of normal. The good news for anybody who values freedom or individual rights, they're going to fail because the background weather of the cycle is not going to support that type of behavior. So while it may be painful and it may be chaotic, we're transitioning to that, and the efforts of people that want to subjugate other people are not gonna go well. So
I haven't seen the movie yet, Civil War, but I met my sister the other day on my birthday, and her and my nephew have seen it. She
Mhm.
actually kind of ruined the movie for me and
Oh,
said that
really?
the bad guy dies at the
Right,
end, the
right.
authoritarian. Have you seen it?
I have not. I have not
All
seen it. I
right.
have not even
So
heard
that's
anything.
exactly what you're saying, is that there's this big struggle, but the authoritarians lose out. Um,
Yeah.
yeah. So, what they say, art, life imitating art.
Yeah, it's
So, like 3 Mile Island and China Syndrome and things like that. Anyway, if you want to see the future besides listening to Benn, um, go see Civil War.
yeah, and think about it, Dale. We are in a civil war right now. It's just a civil war over ideas, right? There's no
Right.
tolerance for any
Yeah,
differing opinions, but it's
you're
not
right.
kinetic yet. Is it going to get kinetic? I don't know. Is it possible? Yeah.
Yeah.
I do think there's going to be some sort of separation. I don't know whether you saw on the news, but the 13th county in Oregon, the state of Oregon,
Hmm.
voted to secede. They
Hmm.
want to join Iowa because they don't feel, and you can imagine they're the western counties, which they say the people in the eastern part of the state, that where the government is and the population is, so the votes are, don't represent what they want. And so there may not be a kinetic civil war, but there's certainly going to be. People have voted with their feet already,
Yeah, they have.
leaving states during COVID, leaving states that were more restrictive to go to states where they were less. You're seeing it from a tax basis, where they're in certain states they're taxing more heavily, so people are trying to leave. So this
Right.
separating and sort of getting smaller and more homogeneous is happening, and that has huge complications for the world. I mean, I think the era of sort of globalism is over, and we're reverting back to more sort of tribal, where
Yeah.
America's is not going to be trading with China as much as they are with Mexico. I think that flipped this past year,
Okay.
and you're going to
Interesting.
see more and more of that. So this globalist view is I think dead on arrival, but it's fighting for its life.
Okay.
The second thing that we're starting to see is stagflation, and this relates to that um, connection with the '70s cycle. We're starting to see evidence that inflation is not going away. We've talked about it before, and I'm going to show it again with a chart from a presentation that I saw, which was fantastic. That um, the next wave is starting, and are we going to get this sort of stagnant growth and persistent inflation? It really looks like it, and again, the background weather is in place to support that. Um, uh, I said this one because it's summertime approaching, and I have an affinity for roller coasters. As a kid, I loved them. So uh, I think the roller coaster for risk is near the top. The question is, and Blake and you were going through that argument very, very well for each case. Did we top now in the month of May, or is the top going to be in July? And we're going to look at the possible paths and the scenarios that can come to
So,
pass on that.
so what cycle are you using for July? Is it the Epic Cycle too that you break down that points towards July being a possibility?
No, July is more timing,
Okay.
sort of like the looking from times from lows to highs, highs to
I see.
lows, and using the
Okay.
Gann numbers to get the time there. The epic cycle is so big that I use that to get the bigger trends like,
Okay.
like the gold and the silver and the Bitcoin that we've been talking about.
Okay.
Um, I think it's funny you mentioned a movie. I think it's time to get your popcorn because the chaos is going to start. It's already
Yeah.
starting, but it's going to really ramp up. And why is that the case? We've seen it, and I just mentioned it. The governments are trying to centralize power. The epic cycle is saying that's over, and it's going to be supporting diffusing of power. So that clash is not. They're not going to go quietly. They're not going to go easily. They're not going to go willingly. So it's going to be a violent, chaotic transition. Um, yes, it's, you described it as the apocalypse. It is going to be apocalyptic, but remember, it's more, think more like the phoenix, right? Something's got to burn down for the next thing to rise up. And that's what I'm trying to keep my mind on, is that there are going to be major opportunities. It's a really exciting time. Don't focus on the negative, focus on, the opportunities that are going to be there, and the opportunities for you to, position yourself and your family for, a strong new epic. Um, the slow growth, no growth, with elevated inflation is going to cause more social unrest. It's interesting. I was listening to a talk. I can't remember which one, but one of the key um, markers of social unrest is inflation. Whenever we have elevated inflation, we have
Yeah.
social unrest. Go back to the 60s and 70s. The last time we had serious inflation, there was a lot of protests, a lot of social upheaval, a lot of change, and that sort of cycle is repeating again. I think this is
Yeah.
go ahead.
No, the Arab Spring.
Yeah,
And I think it was because of food prices. May have been rice. I'm not sure, but they had Egypt when they had the Arab Spring. There was people couldn't get food.
right.
So yeah.
Hungry
So
bellies are not happy bellies. That's for
yeah,
sure.
not me for sure. Right.
The
Uh,
other one, the big one that I'm just surprised it's not getting more discussion is the U.S. election is in 6 months now.
yeah. No one seems worried.
I just Dale, all I can think of, and this is not a political statement, is that whomever wins, the other side is not going to accept it.
Exactly.
Either through saying it was cheated, or this guy is just not a legitimate president. He's not my president. So it's going to be that type of thing. And how is that going to be good for the country and by proxy the world? It's not. It's going to be supportive of fear, chaos, um, survival instincts, I think.
Is this the most obvious black swan you've ever seen that no one's talking about?
I think it is, and maybe it's because it's like that. It's, the elephant in the corner of the room, and nobody wants to identify it. Like what are people going to do if the other side wins? How are they going to react? And they don't want to say, well, I'm going to act like a 2-year-old and stomp my feet and hold my breath in the corner, but they're not saying they're going to support that person either. And that's, to me, that's where the trouble could come. And maybe it's a crazy black swan, and it's neither one of these guys become president. And then what happens? I mean, who the hell knows? The permutations are huge. Um, the bottom line is that we're looking at risk markets moving from bull to bear. Commodity markets have gone from, roughly 2-year bear markets. Now we're going to shift back into the bull, and we have in some. If you want to see an example of what I think the preview is, just go look at a cocoa chart.
Yep.
Um, and the real estate cycle, which is a big, almost 20-year cycle, is set to turn in the next, 6 to 18 months. So throw
Yeah,
that into the mix.
that's something else you were right about. A lot of people were talking about when the Fed was tightening, there was going to be a real estate crash. It never happened. And I
Mm-mm.
remember you saying that wasn't due till 2025.
That's correct. Yeah. So that's
Yeah.
coming. So
Okay.
all those things, again, it's like kind of the perfect storm, and we'll get to that in the future slide. Here's one of those slides from that presentation. The if you want to look at where the panic could start in each cycle, look at where there was excess of debt. In the 80s, it was in the oil patch, right? And that led to the S&L crisis in Texas and the Southwest and the whole oil belt that spread to the rest of the country. In the great financial crisis, it was homes, right? Anybody, a dog could get a mortgage. If you had a pulse, you got a mortgage, 100% mortgage, right? Um, in this last phase, the excess has been in governments, in the amount of debt that government has issued. And part of that, I think, is related to the end of the Epoch cycle, right? They're spending like drunken sailors because they're trying to hold on to power and buy different constituent group support. And this to me is where the crisis is going to have its genesis, one way or another.
Which country is the one with the highest debt to
China.
GDP?
China.
Wow. Wow. Okay.
China's issued the most debt.
That's huge compared
yeah.
to every other Western country.
Yeah.
It's got enormous. Okay.
It is. It's massive.
Okay.
Inflation comes in waves. We've talked about this before. This is an interesting chart in that it was mapping the current inflation, and it says we're moving into the sort of the last one, which is the big and third peak of inflation that would correlate, with right at the end of the 70s, in the 1980s, early 1980s.
3 drives to a top, it'll be like over 12%.
Yeah. Yeah, I think double-digit inflation is on the table, and that's something you got to consider, because think of the things that it affects. It affects dollar, it affects interest rates, it affects bonds, it affects the stock market, it affects social unrest and people, how they feel about things. So all you got to do is go look at commodities, and we'll look at some commodities, and you can see that yes, it is going to be very difficult for inflation not to take off with the way commodities are acting.
Okay.
I'm still bullish on the dollar, and I'm going to show you the chart of the dollar and why I think so. It's not going away yet. This is the dollar's share of versus the euro of SWIFT payments, in the global payment system. It's going back up. It's not going down. People are still using the dollar, not because they want to, but because they have to. And that's one of the things that, like, Brent Johnson, the milkshake guy, I think he's got right, is that it underpins the whole financial system right now. So you can't just stop using it. You may want to stop using it, and you may talk about, oh, we need an alternative and this and that, but you can't. It underpins the whole modern finance system. And until the alternative is in place and can handle the transactions, the dollar's not going anywhere yet. Okay. Commodities. I think the theme I want to talk about is in this presentation is we're moving into the next phase, and commodities are going to be one of the stars. The time for real assets is here. This shows different sort of moves up and then pullbacks. We've had another major pullback, and we've started another big move up. How big it's going to be, we'll see. I just know that the supply-demand dynamics and the cycles supporting it, including the technicals, and when you look at the technicals, when all those three lined up, you get really big moves, and all three are lining up. I'm calling it the perfect storm. We've had a bubble in pretty much everything. The only thing that hasn't bubbled yet is commodities. So some supply demand issues, technical charts setting up, inflation cycle in full swing, and commodities are at their lows relative to other assets.
Yeah. So cocoa was kind of the harbinger of everything else to come.
Dale, if you go back and look at a long-term cocoa chart, like a monthly chart, it based for about 12 years. It broke out. When it broke out of that base, it went crazy. and you look at other commodities and you're seeing the
Same thing.
same patterns, right? Where
Yeah.
they
Yeah.
based, broke out, had a strong pullback, are sitting on top of that original base, and they're ready to go for the next leg.
Okay.
Let's talk about opportunities. Why I'm excited. Am I excited that there's going to be chaos and suffering and all that? Absolutely not. But I'm excited about what's on the other side, right? We are moving into a period where it's going to empower the individual. It's going to empower smaller things, and governments and authoritarians are going to lose out. That's exciting. So how do we play the markets to take advantage of that? And we're going to talk about that as well as, what I'm seeing for other certain markets.
Okay.
So in risk, this is the big question. And as I said, you and Blake discussed it very, very well. And this is a calendar day chart. And you can see 90 days from the spring low, 180 days from the January low, and 270 days. These are calendar days from last October's low, all put us in either early or mid July.
And
And
what
so
level do you have on that white line up there? Where we intersect?
if we go higher, it's funny you were saying like it's around 5,600.
Okay.
I think we could see 5,600 if we get going. But what we have to, and Blake correctly, summarized the situation. We had a high here. We broke out
Yeah.
above the high, and now we're bouncing and dancing with this same level. And are we
Okay.
going to, stay on top of that high where we can then take the white path, or if we get stuck below this, this red line, this full square line, if we get stuck below that, then it's over, right? And the May highs were correct.
I think it's all going to be based upon whether we can extend this bear market rally in TLT and yields come off one more time.
I think you are 100% right. It is contingent on bonds and the dollar.
Okay.
And it's all one trade. You got to get that trade right, and then you'll
Yeah.
get all these markets right.
Yeah. You get the dollar right, you almost get everything right. Okay.
Yeah.
So there's NQ.
Here's
So
NQs.
here.
NQs have made a higher high, right? But
Yeah.
again, it could still roll over because we're in the vicinity of this previous high. I drew
Yeah.
in an ABCD here that, targets just under 20,000.
Okay.
So I think if we're choosing that path, we can certainly make 20,000. If we fail here and get back below like 18.5, I think is the number. What was my number
Yeah.
there? Hold on. Yeah, around 18.5 or so. That would be a warning sign that, hey, this thing is faltering and we're not going to make one more high, but we're going to roll over right here.
Okay.
But these are the probabilities that we have to look at, right? You can't have a blind view and not take price into account, and that's why there's this sort of multiple paths. You guys mentioned the Dow. Here's the Dow futures. This is on a monthly basis. Again, it could push if risk goes. This thing could push up and get that 40,000 level. Maybe 41,000. But this one is, as you could see, we made a high and now we've got an inside monthly bar this month. It looks like it wants to roll over. And it's the nature of the beast right now. We need more confirmation from price to be able to pick a higher probability path.
Got you.
Here's gold. We were talking about gold when it was in this triangle, saying, hey, this is
Yeah.
really bullish. And I want you to look at this chart. This is a weekly, right? That's the move we got. I think your and Blake's caution here on gold is well warranted. I think we made a high here. It was a false break. We had an outside reversal week, which says, something probably ended up there. Does that mean I'm bearish gold long term? No. I think for the Epoch cycle, gold is one of the perfect assets to own. We could pull back to this breakout level all the way down to like 2,100 and still be bullish.
Right.
And the key thing I want you to look at in this chart, because when we get to the dollar chart, I'm going to show you something similar. Look at where we were in this triangle. We were in this triangle basically at the previous highs, and we were consolidating essentially on the previous highs, which turned out to be really, really bullish.
Yeah.
And that's what I kept hanging my hat on when everyone was getting so frustrated in here and said, oh, gold's going back to 1200 and all that. I said, I just don't see it. It's certainly possible, but the odds don't favor it. We're doing a triangle at previous all-time highs.
Yeah.
And of course, we got the breakout and the move higher.
And they threw
May,
everything at it, strong dollar, higher rates,
yep.
everything.
And it didn't
Yeah.
break down. It just was
Right.
triangulating, frustrating everybody. So hopefully we get, for the gold bulls, we get some sort of consolidation that holds, 2200, 2250, and we just chop around here doing something like this, for 6 months, a year, however long it takes before we're ready for the next leg.
Okay.
And that, I think gold still long-term, big picture, great asset to own.
You have
Silver.
targets?
Targets on gold, short term, like 2,800, on the next push.
All right.
Longer term, I don't think 5,000 gold is ridiculous,
Okay.
but we'll see. Silver, here's the silver weekly. Um, you know, this was the frustrating part, right? Doing this garbage for, a year and a half, 2 years. But then once it breaks, you get these runs.
Yeah.
Now, the reason I wanted to show you this weekly chart, we've done 90 weeks high to low, low to high, and 90 weeks is a pretty good cycle. So again, I think something ended up here on silver. Does that mean silver's crashing back to 20? No. What I'd like to see, that would be really supportive of the bulls would be we have some sort of consolidation here in the 28 to 30 range, chop around, go up and down, and go nowhere for a while like this. Because look, we'll be doing that above these previous highs. So still very bullish on silver, cautious short term, think something ended here, and we're moving into some sort of consolidation phase. Last one is Bitcoin. Bitcoin had a massive move from this 30,000 level up to 70. I do think we're going to get some sort of consolidation, which which you guys identified has been happening, that we're making lower highs here, lower lows. So some sort of bull flag maybe plays out for another 3, 4, 5, 6 months. But if we do it near these all-time highs, it's going to be bullish. The odds are we're going to have a bullish resolution.
Okay.
I think this thing could trade to 80.
Okay.
80, no
Do it in
problem.
a day. In a day.
Yeah, no problem. Because when it goes, it goes. You can see the moves it makes when it goes. I mean, there's like about a 6-month move from 25 to 75, roughly. So still like Bitcoin, still like silver, still like gold. Cautious short term. Think we do get some sort of consolidation, shake people out. Sort of get the
And
late.
you added wheat, I bet, to your portfolio.
Oh yeah, yeah. Wheat's been. I was looking back at previous presentations. Wheat's been on it for a while.
Yeah.
It's been because it's been leading the grains. The one I think that everybody is leaving for dead is energy, right?
Yeah. I think it put in a great day yesterday.
It had a great day yesterday. It's just been slowly and quietly going sideways in this square. Here's the lows, here's the highs,
Yeah.
higher low, lower high, higher low. It's
Yeah.
winding up, right?
Yeah.
Broke out of the big triangle. Now we're in this sort of smaller triangle.
Right.
I think crude is setting up for a big move higher. I don't know why. I don't know if it's supply issues. I don't know if it's war. I don't know if it's demand. For whatever the reason, I think people are sleeping on crude
It's
and
supply issues and problems in the Persian Gulf.
yeah,
Hey,
and
hey, gents. I'm
Yes.
sorry. I've been listening to your conversation the whole time, Ben, and I just wanted to say I've heard a lot of macro analysts over the years say that it's crude, a rally in crude that really kicks off any type of recession, historically
mhm,
speaking. Do you
yeah,
believe in that?
I think they're right. I mean, history shows that's true.
Yeah. Oil
And
shock in the 70s. Yeah.
Yeah. So maybe Blake's right. Maybe that's what's gonna kick it off and get us on the risk off mode is crude really ramping higher. Because it's not an asset that the Fed can control, right? And it goes into so many things that if it goes higher, we're gonna have sticky and high inflation.
And our SPR is empty, and President Biden's still releasing.
I know it's crazy. Absolutely crazy.
But great point, Blake.
Yep.
Yeah, Mark
So,
Chandler said every recession was preceded by an oil shock.
so
Mark said that. Yeah.
the technicals and the cycles are saying crude's there,
Yeah.
and the wind's at its back. So we'll see. We'll see if we can get a breakout. I think this price action here is what frustrates everybody and lulls people to sleep right before the big move.
Yeah,
So
because a lot of people are bearish because they're looking for a weakening economy, weakening
yeah.
China. So they're focused on the demand side of it.
Mhm.
But all it's going to take is, look, we saw kind of a prelude of it with what the Houthis did.
Yeah,
So what's going to happen if the Iranians get involved in interfering with shipments?
agreed. Here's another
Anyway,
one. Here's another one in the same vein we talked about.
yeah,
Was
that
nat
just
gas.
turned. Yeah,
Nice turn here.
yeah,
When we talked about it before, it was 3 months ago, and it was on these lows. And I said, just look
yeah,
historically where we've been. Every
yeah,
time we've been down here, it's been a decent buy, and we got
yeah,
the turn. And the other thing that we have to think about with energy is if the world is going to be saved by AI, right, from growth, and it's the next big thing. It's like the internet was in the late 90s. Data centers need to
oh
be
yeah,
humongous. And guess
yeah.
what? They need to be powered by something.
You don't think it'll be a windmill in front of the building, huh, Ben? Or
I
or
think
a,
it's in some
or
people's dreams.
or put a fountain in there and get some hydroelectricity? All right.
Listen, no, it's going to be the squirrel on the
Yeah.
treadmill.
Oh, I have a hamster of keeping my laptop going. So, all right. So,
So energy, right? Energy,
yeah,
whether it's nuclear, whether it's natural gas, whether
yeah,
it's crude oil, energy is involved in this revolution. It has to be there in big quantities.
yeah,
So maybe that's why we're seeing natural gas start picking up now and
yeah.
getting some interest. But
It's had a
it's
nice run.
yeah, it's awakening. The Widowmaker is awakening.
Yeah,
There's Dale's wheat. Um, Lovely chart, leading the grains out.
yeah,
Looks like we've finished a roughly 26-month correction.
yeah. From
And
the
if you look,
invasion.
yeah, and if you look back in 07, 08, we were
Yeah.
28 months high to low. So we're
Okay.
right in the ballpark, got the turn. Now I think this is the one that's leading the grains higher.
You know what? I only see two drives.
Yep.
So
One more to go.
that answers where I think it's going to go.
And Dale, there's a lot of monthly charts that look like that too in the commodity
Yeah,
space.
yeah.
That we're going to get the third big drive along with inflation.
Okay, yeah. Food.
Here's
Okay.
one, new
Yeah,
one,
coffee.
coffee.
Yeah, yeah.
Add a little triangle here. The power
Percolator.
of these commodities is they go sideways for long periods of time, frustrate the hell out of everybody, and then they go. And I think coffee's going, right?
Yeah,
We had to here you can see we had a triangle here back in 08, 09. Where is it? Right here. Broke, boom.
okay.
Just
Yeah,
finished a triangle here.
yeah,
Last month went up. This month an inside bar. This thing looks like it's going higher. And that's coffee. Sugar and cotton are still basing, but they're closer to the end of their correction than they are to the start. So
yeah.
they're another couple that I'm watching.
Yeah, I looked at sugar. It looks like it could be completing
Here's
that.
cotton. Look at
Okay.
cotton.
Yeah,
Huge sideways, right?
yeah,
The reason I wanted to show you this one is massive sideways, got a breakout, stopped where we thought, right on a full square, pulled back to this square. And then here, if you go into your charts and look, This low here was a slight false break with this low here.
Took
And
out all the longs.
exactly. There's so many times. Study your charts. Go back and look at commodities. Big moves start with a false break.
Blake's a big proponent of those.
And commodities, they do it all the time. They make a false break in one direction, reverse it, and then go. And when they do it after a big base, it's huge. And that's the setup in cotton right now. Now let's go to the dollar, because this one's important. I know you guys like to trade the dollar. So the dollar's if you look at it on a monthly basis, we've been in a triangle for almost a year, year and a half now. So we made a low, we made a high, made a higher low, made a lower high, and we're winding up. Why do I think, other than the macro reasons why do I think technically this thing is bullish? Look at where, if you look left, look at where we're doing this triangle. And remember back to the gold chart, right? We were doing a triangle at or near previous highs. These are the highs going back to 2015, 2016, 17, the COVID high, and we're right at that level. What that's telling me is, when this triangle resolves, odds favor it's going to resolve on a higher break.
And that's over what, 106 and a half?
It's around 105, 106 area.
Yeah, it's the highs at 106. And where's the bottom of the triangle line?
Right now it's probably around
101,
102 in that area.
Okay. All right, so I'm going to push back and say that unless we take out 106 and a half, there's one more wave to the downside, which would be, that was about 1,400 points from the high to the bottom of the triangle.
Mm-hmm.
So 1,400 under, what do you say it was, 103, the line? It gives you 90. And that's how a lot of commodities advance.
Mm-hmm.
And then when things really fall apart and we're really in a crisis, then the dollar goes to 120 to 140. But that there's one more shakeout to the downside in the dollar, which fuels everything.
100% possible. Yep. Because I wouldn't be surprised if we had a move that tagged this, this trend line, this bottom of the triangle. One more wind up here, and then we go. So, and again, this is a monthly chart. So if you look at it, completely plausible. This is the frustrating, shaking everybody out, bulls and bears. Everybody says, "Oh, screw the dollar. I'm not messing with it anymore."
I think the long side's crowded from what I've been reading, that it's a very crowded trade, the long dollar.
Yeah, I have no issue or problem with what the scenario you're painting, where we have another push lower first.
Well, I'll have a problem if I'm in it and I'm wrong. I'll just get stopped out. But anyway, that's a great look on the dollar.
Yeah, here's the other one. This is I think trouble. This is the 30-year treasury, right? Treasury future.
Yeah.
It does not look bullish to me.
But it could have a C wave here. All right.
Absolutely. Right. Yep. We could
and
definitely.
That's when the dollar goes down with it.
We could definitely do an ABCD up into resistance and then roll over.
Where is that resistance, that trend line break? It's not all the way up at 120, is it?
No.
I'm thinking TLT.
Yeah. I mean, you're talking about this is on the 30-year futures, probably in the 125, 126 area.
Huh. Okay.
I mean, is it possible? Absolutely. What's the bigger trend in the bigger picture? It looks down.
Yeah.
And it fits right with the big picture that I'm looking at, which is higher inflation, higher rates, higher commodities, stronger dollar.
Got it. Yeah. These
weaker risk. Doesn't mean it's going to happen, right? Does not mean it's going to happen. It's just it's a method that I've used with overview of cycles. Look at the technicals, and then what do the fundamentals say?
Got you. Lots of supply, and no one wants to buy them.
Yeah. So, and that's it. This is our little YouTube channel. We put out a video every week. People can
new design on it.
Yeah, people can come in, listen to what we're thinking based on price action. It's very technical in terms of focused on technical analysis. We bring in some cycle work, but people seem to like it, and more people are coming in. So give a listen, and you can hopefully get some good information out of it. Otherwise, I post on X or Twitter, whatever you want to call it. You can reach me there. I post almost every day.
Why
And
+3? Why did you use the number 3? You know me and 3, but why did you use the number 3?
yeah, I'm
Plus
trying to.
3.
Well, three is a good number in terms of the harmonics. You know, three,
Yeah,
6, 9, the
yeah,
Tesla
complete.
triumvirate.
Yeah,
So the plus,
completion.
yeah, yeah.
Okay. Anyway, I'm curious about why people use 3.
So that's,
And
I mean, if you're looking at the summary, it's yes, it's going to be chaotic. There are going to be tremendous opportunities. We are so lucky to be alive in a time like this because it happens once every 400 years. And be prepared, stay calm, stay focused on the big themes, and you can come through it, and everything will be better on the other side.
you don't know if you have faith till you need it.
Isn't that the truth?
And Ben, we've been talking for years. I always enjoy and learn from you, Ben. And I encourage people to go to Ben's YouTube channel and keep him as a major part of your intelligence gathering. I know I do. And wish you success, and glad I have you in my network through the times we're all entering together, buddy.
I appreciate that, Dale. I value you as a good friend who has a tremendous amount of experience and a tremendous amount of knowledge, and you can't you can't teach that. You have to go through it, and that is why it's so valuable.
Yeah, unfortunately, you have to get some scars. You can't get into the
Oh yeah,
box. You can't box without getting hit.
that's
Okay.
exactly right.
Don't be a boxer if you're afraid of being hit. I'm telling you, it's not the right sport for you. So anyway, Ben, thank you so much, buddy. Really appreciate it. It was excellent. One of your best.
Thanks, Dale. Appreciate it. Hope everyone has a good summer, and we'll talk in the fall.
Follow Mr. Ben Maldonado at Ben Maldonado on X. And that's going to be a wrap. Hope everyone enjoyed it. I bet you'll be watching this recording again. And again, uh, we'll see everyone tomorrow and a couple days left in this week. People are thanking you, Ben. And remember, don't just count your cycles or your bicycles or your commodities, count your blessings. See you tomorrow. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.